Hello and welcome to another video from Just the Tip, the channel designed for traders who want to develop their skills rather than blindly follow signals. In this episode, we're going to be looking at one of my favorite chart patterns, the ascending triangle. First, we'll go through the different things to look out for when identifying an ascending triangle. Then we'll look at the moneymaker, how to effectively execute a trade with an ascending triangle. We're going to look at the execution in the second half of the video, so stick around for that. In the first half of the video, we're just going to look at the correct identification steps. So you might be wondering, what is an ascending triangle? Well, it's a beautiful continuation pattern. The ascending triangle is best known for its bullish bias. However, the prevailing trend leading into the pattern is the direction you should look to trade. In this example, we will look at a bullish ascending triangle, which basically means price was trending bullishly into it. But if you notice the price was trending bearishly into it, you're going to be looking for a short, okay, not for a long position. So back to identifying an ascending triangle. It's pretty easy and it can be done in 3 simple steps. Step 1, you will notice price swinging high and low as the pattern begins forming. An ascending triangle will become obvious when you notice price making higher lows but repeatedly getting rejected at the same horizontal level across the top of the triangle. Step 2, the horizontal trend line across the top should see price touch and withdraw at least twice. The upward sloping trend line should see price drop and then push back up at least twice also. You want to see price bounce between the 2 lines rather than stick to one trend line. Step 3, once you have identified a triangular pattern with a horizontal top line and an upward sloping bottom line, it's time to look at volume. You want to see volume decrease during the pattern formation with a sustained spike as price breaks out. Now, let's look at this pattern in an actual chart. So here we're looking at the Australian dollar against the US dollar on FXCM. The charting platform I use for anyone interested is TradingView. Really easy to get set up. Every trader I know uses TradingView. Or maybe some people that trade low cap alts might use Coinigy. I'll leave a link to both in the description anyway if you want to get signed up. First thing to look for is the direction the price is trending. Here we can see higher highs and higher lows moving into the pattern. So we know it is trending bullishly and we can expect price to continue moving bullishly out of the pattern. Next, we look and we see that price has touched the horizontal line more than twice. We can see it has touched the upward sloping trend line 3 times. Finally, we look at the volume. Now, we do have a nice bit of volume at the beginning of this pattern, which does fade out as the pattern forms. It's not textbook, but it would definitely be good enough for me to consider the trade. As you can see, identifying a triangle is pretty simple. Now let's move on to the money, executing the trade. So just to mention, this is a textbook trade execution based on the research of Bulkowski. He is the dawn of chart patterns. His book is amazing. I've got his book. I'll leave a link to his book in the description. So let's look at the execution. You enter on the break of the triangle top, the horizontal line. More cautious traders will wait for price to break out and return to this level. They're basically looking for a retest, and a retest or a throwback is when price pulls back from its move to test a key level. In this case, it pulls back to test previous resistance. Once tested, we know that previous resistance has now turned into support. This makes traders more confident in their position. But just to be aware that price does not always give you this opportunity. We're going to look back at the Australian dollar example and we'll see that price just shot off. It didn't come back to retest, so you would have actually been better off jumping in on the breakout. And what you do in that situation is completely up to you. If you don't mind risk, you'll jump in on the breakout. If you want to be a little less risky, you'll wait for the retest. Personally, I wait for the retest, but that's just me. So stop placement. A stop loss is placed just below the lowest bottom within the triangle formation. If price hits this level, it's time to sell or go short. And your target is pretty straightforward. You just measure the distance between the lowest point in the triangle and the horizontal line across the top of the pattern. And then you extend this distance above the entry point. It's that simple. Now, let's have a quick look at our Australian dollar example. For this particular setup, entering on the breakout would have been the best decision, as I mentioned earlier. We would place our stop here just below the lowest swing during the pattern formation. Using the standard measure rule, we would place our take profit target just here. As you can see, this trade played out perfectly for anyone that took it. And that is it. That is how you identify an ascending triangle and how you execute a trade on an ascending triangle. And just to let you know, we've packaged up all the material from each of our chart pattern videos into a really useful guide. Basically something that you can have on hand when you want to double check any of the identification steps or the optimal levels to enter the trade, take your profit, or place a stop. I'll leave a link in the description. If you found this content useful, please subscribe to the channel and like the video. If you have any questions about the material covered, just use the comments section below and I will get back to you personally. Thanks very much, and I look forward to seeing you on our next video. All the best.